Welcome back, and you're watching a Market Fatafat on ET Now. We have another management lined up for y'all, and that is Nexus Select Trust. And we do have the Executive Director and CEO, Mr. Sehgal, joining in with us on the show. Thank you so much, sir, for joining in with us this afternoon. And let me start by talking about the consumption growth, which is of around 12.5%, which is slower than achieved in the last quarter. So what's the outlook in terms of the next quarter, that's Q4, as well as FY25 on this front?
So I think, first of all, it's important to understand that last year the base was very, very high, and we are coming off almost a 28% growth in the same quarter last year. So while, yes, there has been a bit of a slowdown, the fact is that it's on a very, very high base, number one. Number two, we don't necessarily, give any advice for the next quarter. So all that I can tell you is that we are in line with our projections that we did at the time of filing the IPO. So we are actually in line. Our overall net operating income, which is the key measure, is up 14%. So we've done our highest ever consumption of 3,300 crores, and we have done our highest ever net operating income of 418 odd crores, which is 14% higher, and in line with our projections at the time of the IPO. So very well under control in terms of projections. Yes, compared to a very, very high base, there has been a bit of a slowdown, yes.
Very good afternoon to you, sir. The shareholders are joining in the conversation. If you could talk to us about your maiden acquisition of the 3 malls in South India, how is that coming along? And also, if you could help us with what sort of a top-line potential, and are you expecting also by when can we expect the acquisitions to get completed?
So the process is on. I think currently we are seeking approvals as required, and we are very hopeful that in the next couple of months that will fructify. In terms of total area, it's 1 million square feet, so it will be 10% more. We are currently 17 malls, that will become 20. We are currently 10 million square feet, so that will become 11. So that's 10% higher. And from wherever we see it, I think there is a huge potential to get an upside on those 3 assets as well. Those are under-managed, under-invested assets, and we should be able to see a pretty high upside on those as well. As you know, our model has been an acquisition-led model. All 17 of our malls currently have been acquired over a period of time, and we've seen very good turnarounds and good growths in all the assets that we have acquired. And we hope to do the same as we go into the final stage of acquiring these 3 assets as well.
Right. So also in terms of, overall the trend that you see, India is shifting towards premiumization in every category. So how is Nexus adapting to this?
Yeah, so I think that's a good point. Basically, 2-3 key trends are happening. The first one is that overall, I think as a price point, yes, you're right, premiumization is going faster than the other segments. But there is movement at every stage. Even at the lower end of the market, I think even in fashion, for example, I think there are brands that are doing extremely well. As far as we are concerned, we are repurposing our malls to take care of this. So wherever we find that, look, there are certain categories, like for example, the supermarket business has been slow, thanks to e-com and so on and so forth. So we have repurposed a lot of that area, and we have given it to new brands like Decathlon, etc. And it's a constant process to make sure that we're getting new brands in. A lot of international brands have come in, especially even in F&B. So there is Pret, there is a lot of other brands that have come in as well. So it's a constant process to move up the value chain. But we have to be careful that we have to do it by market, because we are now in 14 different markets, and every market is different. So we have to be extremely careful that we are still relevant to that particular market and not going overboard. So, for example, we've just opened an H&M in Mangalore, and we would have thought, why H&M in Mangalore? But it's doing extremely well. So I think wherever the markets are ready, we are moving in with brands which are considered to be premium by the customer.
If I could ask you about how much of your area is now coming up for releasing, and also if I could add to that, are you seeing any price hikes on that particular front? And also, how much share do you get from retail and leasing segments when you talk about your top line?
Okay, I think we've got three questions in that. The first one is in terms of what comes up for leasing every year. About 10% comes up for leasing every year. And we get roughly 24% upside in terms of the releasing spread, which is what has happened in these 9 months as well. Last quarter, we have released 2.5 lakh square feet, and we roughly do about 10% of our entire area, which is about 1 million square feet over a year. And that gives us about 24% upside. So that's the first thing. In terms of where do the rentals contribute, obviously, the bulk of our revenue. In addition to that, there could be smaller areas of revenue like parking fee and common area maintenance, etc. But bulk of it, 80% plus, is actually rentals. And rentals are two parts. One is the minimum guarantee, which is typically 85% of our rentals, and about 15% is linked to sales, which we call the revenue share. So roughly 85% is fixed guaranteed rental, and about 15% is revenue share, which is dependent on the growth that we get in a particular month, quarter, or year.
Right, so thank you so much for joining in with us this afternoon on ET Now. It's a pleasure having you on the show, and what to expect from the company is also great to know. Thank you so much for that. But on that note, let's just slip into a very short break. We'll be back with more stocks after the break.
You're watching Market Fatafat on ET Now. Let's bring on board Osho Krishan now on the show. A very good afternoon to you, Osho. Thank you so much for joining us. And let's talk about IPCA Labs. How is this one looking at the charts to you?
Very good afternoon, everyone. Well, talking about the technical charts of IPCA Lab, then it has given a technical breakout on the daily time frame. So we are expecting that from here onwards, there can be some fresh buying that can be seen in this counter. On the higher end, we are expecting nearly 1240 to 1250 as the immediate resistance, but better to see some kind of cool off in this counter. Once if the counter corrects towards the zone of 1160, 1150, that will be a very strong level to accumulate this for the higher target of 1240, 1250 odd levels.
Alright, let's move on and let's talk about Chambal Fertilizers. As you can see, it's flashing at the bottom of your screen. No doubt, if you look at the revenue, there's a sharp dip on a year-on-year basis, but the margins in the pack have actually seen a rise on a year-on-year basis. If you look at the margins, they've come in at around 14.5% versus 8.1%. So it's a 638 basis point uptick coming in for Chambal Fertilizers margins on a year-on-year basis. If you look at the consolidated profit, it's come in higher by about 41.8%. It's come in at around 459 crore rupees. The revenue from operations is down on a year-on-year basis. On a consolidated basis, it's down by about 47 odd percent. But yes, PAT EBITDA is actually in the positive trajectory, and you can see the stock also now trading higher by about 2.5% on back of its earnings.
Okay, let's move on and talk about Coforge. This one is buzzing away in trade today as well. After Jefferies met with the management, what the key highlights came in, that the demand environment remained quite tough. Client budgets may remain constrained in 2024, but the management continues to keep a steady growth in FY24 versus an FY25, led by the healthy order wins. Also, they're expecting gross margin expansion to drive the adjusted EBITDA margins in FY25. So yes, on the back of that, today we're seeing Coforge is buzzing away in trade. But Osho, Coforge on the charts, what's that looking like?
See, Coforge is in a secular uptrend, having higher highs, higher lows pattern, and currently it has taken support from the 21-day exponential moving average and again has started gaining traction. So overall, the IT sector is looking very bullish, and we are expecting that the same traction should be seen in Coforge in the near period. So one should definitely try to accumulate this counter. The immediate target comes around 66, 40, 50 odd levels. But once it surpasses that zone, then from there onwards we can see a strong surge of approximately 120 odd points on the technical charts of Coforge.
All right, that's the take coming in on Coforge. Shesha, Triveni Turbine, why is this one in focus today?
Well, yes, very strong set of numbers. The stock is soaring in trade today, nearly 18% higher in trade as we speak. It is one of the biggest gainers in the Nifty 500 index. As I mentioned, very strong set of numbers. Revenues are up 32.5% on a year-on-year basis. Margins have largely remained steady on a year-on-year basis, but the order book position is very strong. Order book size stood at about 1443 crores for the 9 months, which is an uptick of 27% on a year-on-year basis. And for the third quarter alone, company has booked orders worth 531 crores, which is an uptick of 26% on a year-on-year basis. Management commentary is also very strong. They say that they continue to witness healthy demand both in the domestic business as well as in the international business. And with 14% increase in overall inquiry book, they remain constructive on the future orders for the segment in the medium term. All in all, commentary is very strong. Numbers are also very strong. As you see, 18 to 19% uptick on this counter.
Let's move on to the next talk on technicals and Osho Krishan International. Last 6 months, a bit of a subdued performance, but in the last 1 week, we're seeing an uptick coming in. So what are the charts now indicating for Krishan?
Overall, there are two technical positive developments in this counter. Firstly, it has started gaining traction in the recent 2 to 3 trading weeks, which has formed a flat pattern breakout in this counter. So from here onwards, we can expect a very strong upsurge of nearly 80 to 100 points on the higher end. That comes around 810 to 820 odd points. Secondly, it has came above the 200-day SMA and with positive crossovers among the short-term moving averages. So these two are very positive development for this counter, and we are expecting that from here onwards we can witness a strong reversal. And from short to medium term perspective, definitely one should try to gauge the momentum. Even in the coming future, it has the potential to go even at the higher levels.
All right, moving on. Ankita, let's talk about Varun Beverages. This one came out with its numbers earlier in the week, and what are brokerages saying now?
Well, yes, a couple of brokerage notes that are painting a very bullish picture for the company. On the back of that, we can see the stock up 3%. First up, Jefferies is maintaining a buy on Varun Beverages, and they've also hiked the target price to 1,480 rupees from 1,450 rupees earlier on. Now, they feel that the Q3 performance was a huge contrast to every other FMCG company. They feel that they have ended the year on a high note, although it's a seasonally low quarter. Now, debt levels have swelled as capex continues to stay high. They like the growth mindset for Varun Beverages, and they set to expand the capacity by 45% for CY24, and that gearing also stays under control. So Jefferies is maintaining a buy on this particular counter. Motilal Oswal is also reiterating a buy, and they have set a target price of 1,500 rupees for this particular counter. And on the back of this bullish note coming in from the brokerages, the Varun Beverages up 3% in trade today.
Let's move on and talk about M&M then on the charts. And Osho, what's the outlook for M&M today, trading at 1,725? Furthermore, upside is what one could expect?
Overall, the auto sector is looking very, very promising even at current levels also. And M&M has given a consolidation breakout in this week around the zone of 1640 for the immediate upside, which can be seen as the first resistance around 1730, 1740 odd levels. But the time we see a strong breakout from these levels, then again we can witness another 100 odd points. So one should definitely try to gauge the momentum, but only above the sustenance of 1730 on the spot price.
Surely keeping an eye out on that one, but let's move on and talk about an earnings candidate. We have eMudhra that is in focus as well after its Q3 numbers were reported. When you're looking at it, yes, revenue saw an uptick of 59%. In terms of the EBITDA performance also, we are seeing an increase, but the margins, that's overall EBITDA margins have seen a contraction, 25.3% versus 34.6%. So that's down by around 900 basis points on a year-on-year basis. Net profits of the company, 31% growth, but clearly pressure came in on the margin front, so that's one to watch out for. As of now, the stock is down and out in trade. 3% decline is what we're seeing for eMudhra in trade today.
All right, moving on. Osho, let's talk about Bharat Forge, and how is this one looking on the charts to you today?
Again, Bharat Forge has given a breakout from consolidation pattern. So we are expecting that from here onwards, there can be some positive traction. There is not very aggressive target in Bharat Forge, but overall the trend seems very robust, and the recent consolidation can be acting as a very strong support base for this counter. So any dip towards the zone of 1260, 1250 odd levels should be auguring well for the buyers, and on the higher end 1300 should be acting as the first target, and once we surpass that level on a closing basis, then 1360 will be the next resistance that can be seen for Bharat Forge.
All right, and with that, we come to the end of this edition of Market Fatafat. Thank you so much, Osho, Ankita, as well as Ashesha for joining us on the show and taking our viewers through all the stocks that were buzzing in trade. And with that, viewers, we are totally out of time on this edition of Buy Now. I beg your pardon, Market Fatafat. Stay tuned. Closing trades coming up next.